Let's also get on board Abhishek Goenka, who's founder and CEO at IFA Global, and he joins us on the show as well. Abhishek, hi. We've spoken to a couple of people on the show already on where they think the rupee can move on, and they are bearish on the currency. 68 is the kind of level that we're getting in right now. What's your sense with the kind of decline that we've seen today, 0.7%? How much of a further decline would you expect?
So if you look at the rupee, it's been holding on between 66 to 67 range for quite some time. And 67.20 was the previous top. So technically those levels have broken today with a big momentum. So in the morning it was a little bit of selling and again it has gone up. So now I think the NDF markets are quoting something around 67.45, even though the Indian closing has been around 67.30. So it shows that the momentum is building on the currency. The US dollar is getting bought. Earlier Indian currency was not getting so much hit, but now I think it's again following the same cues what the other major currencies are following. As we all know that the major Asian currencies are down, all the currencies except Thai baht, I think all of them have got a big hit. Internationally, the South African rand, Mexican peso has all been all-time low. Japanese yen is getting bought because of safe haven status. Euro is getting bought this time for a change because of safe haven status. Gold is going up. So basically it's a complete risk aversion scenario, and of course the emerging market currencies including rupee would not be left out. And since the resistance is now broken, I think it's a buy on dips on the Indian currency. So I think possibly it could head higher towards 67.80 in the next 2-3 days.
While we are all busy blaming China since the time 2016 started, most market participants now seem to be also pointing at that things haven't really improved in US because the data from there is not consistent. And take a look at Europe, take a look at Japan. The concerns from there on could really come on surface at any point in time.
So if you look at US, of course, because the oil price is going down, inflation is getting a concern. The 2-year, 10-year is getting flattened in terms of the curve, of course. But still, I don't see that there's a big problem in the US per se. Still the expectations are 2 to 3 hikes. As per the euro is concerned, I think euro is getting bought because of the risk-off sentiment which is getting into the market. So I don't think those factors are something which are really worrying right now. I think the Asian factors of China and Hong Kong, if you look at Hong Kong, the Hong Kong currency is getting battered every day. The stock markets are down by 30% if you compare it with last year. So I think it's more of the Asian phenomena rather than the developed markets phenomena which is moving the market. So I think till the time this goes, I think the markets are going to have mayhem. But at the same time, I would like to say that this is also an opportunity in the market. So if the markets keep moving like this, I think there will be also opportunities on taking positions on a reverse side. So I think it should start coming in another 15-20 days. So I think people need to be very cautious. Everything is rock bottom, so it will be a good opportunity also for people who want to build up positions in this market.
Abhishek, what's your sense coming in from the Indian markets? Because for the last 1 week and more, we've only been following the global cues and the equity markets which have been declining, not just in India, but in the regional space as well. So the inflows haven't been so encouraging, even as we've seen good numbers perhaps coming in sense of FPIs and the debt market there. What's your sense on all of these numbers going ahead?
So if we look at the Indian numbers, of course, equity markets are getting sold off because we are not detached. Debt market, of course, it had flows, but slowly and steadily we are seeing flows, some outflows happening from the debt also. And possibly the yield is also inching up. So, going forward, it totally depends on this Chinese thing. If these things increases, and, markets have already priced in up quite a lot. So if things settle down in 10-15 days, then I think there's a huge buying going to come in the Indian markets. But if things don't settle down, and if we see fresh skeletons coming out like we saw in 2008, right now is only China. You never know, there will be fresh skeleton coming out of companies going bankrupt or some major news coming in. So if something like that happens, then this is going to escalate for another 2-3 months. But if things get settled down in 10-15 days, then we're going to see huge buying coming in the stock markets.
Fair point there. We'll watch out for that, Abhishek. Thank you so much for joining us with your sense on the money market and, of course, on what to watch out for as the days go ahead. Today, of course, has been a difficult one as we saw the rupee decline ever so sharply. But with that, it's time for a break. But an interesting quote from Warren Buffett, who finds value in oil and says, and I quote,